Welcome back to the BA Podcast. Your boy C-Roc here in Las Colinas at the Ritz for February edition of Board of Advisors. I'm here with Jeff Stock. What's up, man?
How's it going?
Good, man. You ready to rock?
I am.
All right, let's go. So you already have intention to get some TikToks out from this episode.
Absolutely.
So I love that.
I have actually only posted 2 TikToks in my entire life.
Really?
And they were me singing to some, I don't know, Black Bear song or something.
Oh, really? Well, no, I love it because you understand the concept of repurposing, which when you do any content, you got to figure out other ways to use it. So no, I love that you said that, man. So tell me and the audience, what do you do? What is your focus every day?
So my company is called Stock Alternatives, and we do alternative investments for accredited investors. So people who earn more than 200,000 or have more than $1 million net worth. And they have open access to a lot of different investment opportunities that are not available to people with, lower thresholds.
Gotcha.
And typically you can get much higher returns, but the holding periods are longer or they're less liquid.
Yeah. So some examples would be real estate, right?
Yep. Investing in passive real estate. So it's kind of done for you real estate. Someone builds the homes and you get the profit, or someone has the tenants and you don't have to deal with the landlord issues.
So you're LPs instead of GPs.
Correct.
Right. Yep. Okay. Yep. So that's real estate. What other alternatives that are there?
So there's one company that I am partnered with that they buy airplanes. And then, so they might buy an airplane for $3 million, and then they'll sell the parts, and they have parts distributions with like 1,500 merchants. They'll sell the parts over the next 3 years.
Like a timeshare.
It's like,
you're talking about like the parts, like
no, it's like if you bought a car, like when it's getting old. And you sold the parts.
You're talking. Oh, okay.
They do that.
I thought you were talking about. Wait a minute. I thought you were talking about parts, like you can,
airplane parts, like engine.
Yeah, no, but I thought you were talking about pieces of the plane.
No, it's not. It's not a timeshare in the airplane. No, so they buy the airplane, they sell the seats, they sell whatever they have a million different parts on the airplane. The parts are worth $12 million. The airplane they buy for $3 million. It just takes a little while to sell that $12 million worth of parts.
A used plane.
A used plane.
Okay.
Yeah, so
I didn't know that.
The decommissioned airplane.
Decommissioned airplane, the parts could be worth 4 times as much as the whole plane put together.
Exactly.
That's wild.
And some of the parts are in high demand. So those parts sell like within the first 6 months. And this company, they get you most of your money back in the first 6 months. And then after that, you're making a profit. You get 2x or 3x over the next three or 4 years. And then they have a little bit left over at the end. They just try to close the fund and they kind of like fire sale it because it's more convenient at that point.
That's amazing. I didn't ever know there was anything like that.
It's my one, probably my most interesting investment. That's easy to explain. It has collateral. You have the airplane, so it's very safe compared to other investments. And they have a track record. They've done this with like their 6th or 7th plane now.
Okay.
And then they've been selling parts for 20 years. So,
wow. Yeah. Okay, that's one I wouldn't have thought of. What else? What other alternatives?
Besides real estate and airplanes?
Yeah, anything else?
Well, there's always crypto, Bitcoin, Forex, futures, the AI trading strategies. That's always a very high potential return.
Yeah.
And I have some of them that I have access to that have really, really strong track records, where they're right on trades over 80% of the time.
Wow.
And, they're pretty consistent, getting over 10% a month. So
have you heard with those? I've heard that there's insurance that the people that run those can offer, or they pay it themselves a premium and it covers the losses.
So that's a good question. So it's always going to be risky, but one of the companies that I'm partnering with, after you get a return, they bank 10% of it.
Yeah.
And they put it in like something safe like Treasuries. So then therefore, if there's ever some sort of weird event, you have that backstop.
Yeah.
And with the rates of returns they're getting, after a year or two, the backstop is more than your original investment.
Right.
So
that's pretty amazing. All right. Well, let's get back into the story of how you got to doing what you're doing. Where'd you come from in the first place?
Yeah. So the reason why I love what I'm doing is back when I was at University of Connecticut, they had this student managed, well, I'll start from even earlier. They had the stock market challenge for the Big East conference. So they had all these math nerds, like the finance department. I was like the one in the actuarial department that really liked finance. So they're like, we'll let him in. And they had us compete to see who could pick the best stocks with paper money. And we picked Amazon, This was like in 1997, 1998, somewhere in that time range. And Amazon just happened to do really well. And we picked other internet startup companies that I think we averaged 72% during the 4 or 5 months that this event took off. So we got this reward. We got a prize for like $15,000 or $10,000 for the university, and we also got to go to the Big East March Madness at Madison Square Garden in a limo, and it was a promotion for the company that was sponsoring it.
Right.
So then the university was so proud of us. They said, we're going to start the student managed fund and showcase our students because they did such a good job. And they picked 5 people that were part of this Big East challenge. And they said, you're going to manage 1% of our university endowment. So we're like, oh, that's cool.
How much was that?
It was about like $500,000.
Okay.
So not terrible to lose it.
It wasn't Harvard. It was UConn.
It was UConn. Yeah. Absolutely. So then, we had the same strategy. Like we had Amazon and we had all these internet startups, and it was a little bit of groupthink. They didn't really plan it out, like diversify and capital allocation and support the valuations and all that stuff. But that was right before the .com crash.
Oh, man.
And all the values plummeted 90%. And then what happened after that was they wanted us to go in front of all the donors to UConn and talk about how great the program was. So all these other students that were with me, they all just, how when people kind of get ghosted, they all disappeared. And I'm like, I think this might be an opportunity. I'm going to go talk to these people because these are people who donated lots of money to UConn, and maybe it'll open up a career for me or something when I graduate. So I'd show up and be like, I'm the only one left. We lost 90% of the money, but you know what? We were only 1% of the portfolio, and the overall portfolio was diversified. So I tried to spin it, and they kind of understood, and they were impressed that I was still there.
Right.
And then when they actually rebranded the student managed fund, if you go on the UConn website, they say that they say it started a year later. They don't mention that we screwed it up the year earlier.
Now, if it wasn't, the stocks weren't sold and stayed in, what would it be now though? They'd had the money back plus.
So Amazon alone would have been a fortune, right?
Yeah.
So I guess we weren't wrong in total.
No, you guys they weren't patient enough.
But exactly. However, now they make the students like pick different industries, and they have to show the correlations, and they have to do more math and actually learn something.
Gotcha.
So rather than just saying, oh yeah, we're going to throw a dart and hopefully we get lucky. And maybe it's a better approach, maybe it's not, but at least they have to hedge and show that they can manage money.
Did any of the donors give you any opportunities?
So at the time I was an actuarial science major, which for people who don't know what that is, that's like the insurance nerd. Mm-hmm. In fact, there's like a joke. Like an introverted actuary looks at his shoes, and the extroverted actuary looks at the other person's shoes. So we're not like the most. Believe me, I'm in the top half of actuaries in terms of expressiveness. So at the time, nobody in investments was hiring. The market had just crashed like 70%. I applied for a bunch of jobs, and then the actuary, the insurance companies, they were giving sign-on bonuses, great pay. So I ended up taking a job on the insurance side.
Okay.
And then, within a year or two, I ended up hooking up with the investment department at a big multinational health insurance company. And actually, as an intern, I worked in the trading room, and I developed this software that could tell whether the bonds were kind of rich or cheap at the time. And they would try to buy low and sell high with this tool. Yep. And they ended up, it doesn't sound like much, but they beat the benchmark by like about 0.5%. But when you're talking about $10 billion, 0.5% is a lot of money.
Yeah.
So, and that was what they were getting paid on. So they were happy with my help. And then I was always like
No, this was a system, or was it actually a tech platform?
It was, we did like, this was back in the like 2000, 2001, 2002 kind of era. So I plotted all the different prices, and we made graphs. And then when the prices on the graphs diverged from like a certain line, then the analysts knew that it was a buy signal or a sell signal.
Yep.
So it was very simple, and I used a macro to do it, like in Excel. Okay. And then I put it to like row 500, and the guy who was in charge, the big wig at Aetna. Oh, I guess I can say the company.
Yeah, not.
And he called me up and he's like, your thing broke. I'll buy you lunch if you fix it. So I'm like, okay. So we went to lunch, and then I looked at him like, oh, I just have to change the code from 500 to 5,000 and it'll work for another 2 years or something.
And so, all right. So then you're in that world, and then
yep.
How did you get into doing it now?
So I spent 20 years as an actuary. So measuring risk, I got involved in some acquisitions and due diligence. And that was really like the types of stuff that I like to do. I like to do analysis and analytical. Mm-hmm. So then I ended up becoming a chief actuary at a multinational reinsurance company. And they decided to exit the US. We did some analysis and I said, it doesn't really make sense to take the risk that we're taking. And then after that, I decided to be an entrepreneur. So for 2 years, I've been an entrepreneur. And I've gone down a few different avenues. I wrote a lot of insurance policies for Medicare and for Obamacare or ACA.
Yeah.
And I thought that was an easy job, but it's actually a lot of work. And then I started off, I wanted to pair the Medicare with being a financial advisor. But I thought, I kind of listened to like the Bogleheads. I don't know if you know what Bogleheads are, but people who follow Vanguard and say, well, nobody really beats the index because of fees.
Right.
So therefore, you don't need a financial advisor. Just put your money in the index and you'll win. Right. And I believe that. So it was very hard to be a financial advisor when I just said, just put your money in the index. I mean, I could say, put your money in the index and I'll take my 1% or whatever. Right. But I didn't feel good about that. Something didn't sit right.
Right. And you feel like there's not enough margin there really to run a business.
There's plenty of people making lots of money as financial advisors.
Right. But not feeling good about themselves.
Correct.
And so the alternative financing creates that.
So what I morphed into, I started actually responding to Facebook ads for accredited investors. We're like, oh, we're going to develop land, and after we buy the land cheap, we entitle it and we get all the permitting done and we get the utilities in there, and it's worth whatever 2 times or 3 times more, and we can do this over the course of a year or 2, and we might be able to do it on a few different properties, and we'll give investors 30%. I was like, well, this is way better than sticking money in the stock market. This guy's hasn't lost anybody money in 20 years, and he's been giving over 20% returns. So I was like, okay, there's something here that I can add value, because I can see what a good investment is and what a bad investment is. Even though I didn't do it when I was in college, I learned there's some things that you're pretty sure they're good. There's some things that you're pretty sure they're bad, and there's some stuff in the middle. And then there's a few things also where they could be way over here, like a super home run, but maybe it's like a 20% likely. And I think I'm better than the average person at figuring out that already. At figuring out if like the 20% is really like 50% or 60% likely.
You look for the edge.
So I have some interesting like angel type startup companies that are definitely going to do well. And I put a good amount of money into them. Not too much where like if I lost it all, it would matter.
Right.
But I've taken some bets. And I also offer some of these, you can call them bets if you want to investors.
And the industries, rough, like, you don't have to give me exact companies, but unless you want to, but like what industries are those in?
Yeah, so I have a company that they're developing a tokenized way to take gift cards and make it into rewards. So like if say you go to Panera Bread, normally you just get like your credit card points. It might be 2% credit card points, but you can pair it with this rewards app where you can get another 6 points of bonuses. So you're getting an 8% cash back instead of 2. And then they give you that cash back in the form of like money you can spend on things. And say Panera could offer additional incentives to use that cashback rewards at Panera.
Okay, so let's get this straight, just so I'm clear. Panera's reward points, are you talking about?
Yeah. So
and they can convert those into cash?
Yeah. So they basically tokenized, and the owner of the company can explain it way better than I can.
No, but I understand tokenization.
Yeah.
But what I'm saying is the reward points, not from your credit card reward points, it's from Panera's reward program.
Yeah. So it's basically any company that has a gift card, they can take the gift card and basically make it so as if you bought the gift card and use it at the exact same time.
Gotcha.
Through the app.
Gotcha.
That's how they get.
Okay. So Starbucks hasn't, Dunkin' Donuts. These are the ones I know.
All those companies have it.
Subway, maybe. I don't know.
And they're trying to get into the airline industry. So if you buy an airplane flight, that you'll get some amount back, and then you can kind of add that to your frequent flyer and get more discounts. So there's so many different uses of this. The travel industry, cruises.
Yeah. Okay, so that's one of them.
They're making deals with ballparks and things like that. So that one is going to do well.
Okay.
And if someone's interested in that, the way to contact me, jeffstock360.com. You can get my information.
Okay. And what about let's see, there was, so let me look at this for a second. So you get an angel, well, not an angel, but like a startup, and you want to be an angel investor in it, whatever. You put your money in sometimes, but then you'll open it up to your clients as well.
So we're raising money for a lot of different things.
Yeah.
And enough things that you can diversify your portfolio to reduce the risk. And anything that's getting a lot of investment, we're definitely going to be co-investing in as well.
Okay.
So,
and then you'll do actuary work, your old school actuary work on the due diligence.
I'm doing a lot of due diligence. I'm reviewing the financials. I'm making sure that the growth projections value the company at something that's fair for the people buying it. And usually when I say fair, I'm saying in some cases they might get a 40 or 50% return over time. Like, right now, there's a company that does fascia blasting. They're making all these devices. They're going to get huge margins on it, but they need the capital. They need it fast. And if you invested, and it's going to be too late by the time this podcast comes out, but we have an arrangement with them that if you invested like $1 million, you can get a 30% return in 6 months.
Oh, okay.
So which is absolutely incredible. So yeah, if you want to invest in it, let me know.
Well, no, and I think I'm familiar with this company, and they've had a good history already of sales, plenty of demand.
Exactly.
And the founders, done a very good job.
They're amazing, and they'll get that money.
Yeah.
They probably could have got it for less, but they'd rather give it to an investor than somebody on Wall Street that's like a bank or something like that.
Right. Okay. So, and again, it's Jeff Stock 360.
jeffstock360.com, and also my company is stockalternatives.com.
All right.
So some of my offerings are on stockalternatives.com.
Thank you very much for coming on today, man. Appreciate it. That was good
Thank
stuff.
You.
Hey, that's this episode of the BA Podcast. Your boy C-Roc signing off with Jeff Stock. Make sure you subscribe on the YouTube channel, the Board of Advisors, and also subscribe on your favorite podcast platform. Until next time, I'm signing off.